Good morning, Bill.
Today, I hope all of you had a big July the 4th. We're discussing the issue of innovation.
Something we all need, right?
Well, let's talk about what innovation means. Innovation means either doing something new or doing something better that you do today, more efficiently, more effectively, that sort of thing. So let's talk about the top 3 innovations that you can remember in your lifetime.
Ones I did?
Well, not necessarily the ones you did, just the ones you can remember. Because as we get older, sometimes we forget.
Yeah, I forget a lot. But obviously, I think the one that would come to mind for most people is this whole concept of the cell phone. I mean, that was so different than when we were growing up. Oh, gee. I remember when we started this company, and as soon as I would land at an airport going on a business trip, the first thing everybody did was run for those phone banks of telephones.
Not anymore.
Not anymore.
They just turn their cell phone. In fact, a lot of times, you don't even have to turn your phone off anymore. All you have to do is put it on airplane mode.
Right, yeah. And so you're on, everybody's turning it on as fast as they hit that.
That's a whole nother innovation, airplane mode. You never even heard that term, airplane mode.
No. Some innovations are probably good for the company, but not good for the customer, like airplane flying. But the computing power that phones and iPads and laptops have now. When I first started doing programming back in the dark ages, we had to take a stack of cards over to the computer center at the university, load them up, wait about 6 hours for them to run, get your output back to see where you made your errors, and do it all again.
Many of our listeners don't even know what punch cards are, all right? In fact, speaking of that, I listened to an innovation. I listened to a documentary over the weekend about graphene and to replace silicon. And I didn't realize this, that cell phone that you have, that smartphone, when you turn it off, even though it's off, there's still what they call leakage, power leakage. And graphene theoretically does not have any, if they can make a graphene battery, does not have any leakage.
Yeah, graphene is one of those substances that they've been aware of for quite a long time. And they've always seen that it's going to have huge potential, but they just haven't got there yet.
They can't mass produce it cost effectively.
Yeah.
And so there are many innovations. So you think the cell phone's a big one? I agree with that. What's another one that you can?
Well, the computing power.
And it's expanded. Moore's law and all that sort of thing.
Yeah.
And in my world, there's been a tremendous amount of financial innovation. The 401k, the retirement plans, privatizing retirement, tremendous securitization of mortgages, tremendous amount of financial innovation. Some has been good, some has been bad.
Right. Innovation
almost always leads regulation. And we have regulation put in place to put some of the checks and balances on innovation.
Right. And innovation is often disruptive in some way, right?
It is. It could be basically continuous, or it could be like taking an existing product and moving it along incrementally, or it could be discontinuous.
Right. When the internet was invented, that changed the way business is done in this U.S.
It did not appear to be that way at first.
No, and you think of a company like Amazon, without any bricks and mortar in the normal sense of a storefront, being a major potential competitor to Walmart, who's got all of these stores everywhere.
And Walmart has had to change the way they do business because of Amazon.
Exactly.
And vice versa.
Right. So yeah, there have been some major changes. There was an interesting article in the New Yorker a few weeks ago where it talked about the fact that there's been a lot made of disruptive innovation, from Christensen's book and Michael Porter's work.
Innovator's Dilemma.
Right. And, and there's been, this article claimed there'd been too much focus on that. And then if you look at companies that are really strong and have done well in a variety of discontinuous environments, they are the companies that are constantly making small incremental innovations. that are constantly adjusting to the market, coming up with something brand new to deal with the way things are changing in the market and managing that. And many of the dinosaur companies that they talked about in some of those books have done actually quite well in doing that.
Well, you know, the world has changed. Let's talk about mortgage for a second. And did you want to finish a point?
No, I never have a point. Anyway.
Let's talk about mortgages for a second. When I was a kid, I remember my father was a developer, a residential developer, and I remember going into the savings and loan and with a customer, somebody buying one of his houses, and I recall the documents they signed. They signed a note and a deed of trust. That's all they did. And it was a struggle to get a 20-year mortgage. It was just, there wasn't much choice.
Yeah.
But there were only two pieces of paper to sign. You shook the banker's hand and that's about it.
Right.
And you signed two pieces of paper, a note and a deed of trust. Now, the average mortgage file that's sold to the GSEs is 600 pages and a jumbo's about 2,000. So there's a lot more documentation, things to sign. However, the consumer has a lot more choice. There's much more choice.
Yeah, much more choice.
Much more regulation, but much more choice.
Right. And if you look at real costs, many of the real costs of mortgages have actually gone down.
They absolutely have.
So, you know, it's cheaper in some sense, and you know, everybody complains about that regulation, but it's there for a reason. There are
They're for disclosure.
abuses, you
Well,
know,
it's there for consistent. The goal is to have consistent and commonalities in disclosure, both up front with the new. It's now called the good faith estimate, but it's headed toward a lending disclosure, and then a closing disclosure, a lending estimate and a closing disclosure.
Right. It used to be when that banker shook your borrower's hand, they probably knew the whole family and the parents of the family. And
It was a relationship loan as opposed to a transaction.
Exactly. They knew everything about that particular person.
But they were taking the balance sheet risk. They were putting that loan on their books.
Exactly.
They weren't taking that loan and selling it to somebody else. They were not originating to sell. They were originating to hold.
That's exactly.
And so they knew people. They did real underwriting for themselves because it was their depositors' money they were loaning, and they were keeping that on the books as an asset.
You know, and that has changed so much with the securitization.
Well, yeah, they just originate to sell now.
Right, originate to sell, and the people who are actually buying that loan or the
They don't know.
revenue from
They
it,
don't
they have
have
no
to.
clue about who those people are.
They have to fit. They have to have certain ways to describe them financially, and one of the ways is a credit score. Another way is so they'll know how good the appraisal is our appraisal score.
Right, and so everything has moved from absolute certainty about the data to a statistical presentation.
Right, presentation and inference about the data.
And that changes also the way people think about it. They assume that there's going to be a certain amount of default, and they assume that there's going to be a certain amount of fraud, and they just build that into the pricing model.
And that has allowed the market to get much bigger, much more liquid, and get much more fluid as we've had this statistical inference about who's doing what in the marketplace.
But it also opens the door for some bad behavior.
Yes, as all innovation does.
Yes.
All innovation opens the door for potential bad behavior. That's why regulation comes in, to try to erode out the bad actors.
You know, and we talked a couple of times ago about the fact that, or maybe it was last time, about the polarization of the political market right now. And so we have this polarization where we have some people are feeling like we never have enough regulation, and other people feel like we should have no regulation. And as a result, the compromise or the ultimate solution sometimes is not optimal. You know, sometimes the too much regulation people win, sometimes the not enough regulation people win. But it would be so nice if they could come together and recognize that a free market economy requires some regulation and work to try and achieve that optimal amount.
Well, that's sort of like innovation in and of itself.
Yeah, that would be nice, wouldn't it? That'd be a good innovation to have.
Exactly. Well, we're out of time. We're talking about innovation. We hope you had a happy July 4th. We're off for the second part of the year. Hope you enjoy the All-Star game. This is FNC's Morning View. I'm Bill Ray with Bob Dorsey. Goodbye, Bob.